think that broad market ETFs will continue to be investors' preferred option, or is there demand for more granular sector ETFs?
Yeah, I think both, to be honest. I think it depends a bit where we are in the cycle. And I think in a bull market, there's a tendency towards large blue chip indices by most of the investors, most of private investors, I would say. Having said that, there's an increasing usage of sector ETFs out there. I mean, sector ETFs have been around for a very long time. And I think globally there are more than 500 billion invested in sector ETFs. Nowadays, at the moment, sector ETFs are also very much in the news and in the spotlight because of certain changes in sector qualification with this new communication services sector, which is very well demanded. For example, the US version had a phenomenal start in this respect. But overall, I think once we become late cycle, sector ETFs become probably even more relevant because you don't want to invest only in the broad market. Coming back to the fact that some investors want to be invested, but with a cushion, for example, smart beta, low volatility, be it global convertibles, but could be also with a defensive sector. On the other hand, if you want to invest, or if you believe in growth, you want to overweight sectors like the communication services, for example, that have a growth component. Also because in the last couple of years, the dispersion between the sectors has been really significant. There were really very big differences between the various sectors.
I am a big fan of sector ETFs. I was one of the first sponsors of the first ETF, sector ETF in Europe. And I am pushing a lot to see some new launches on Asian sector ETF, for example. There are some mini regions. If I want to buy China healthcare, I cannot. There is 2,500 components in the Shanghai composite. There is
so scale shouldn't be a problem.
Yes, it should be a problem. It just that's why I think as you mentioned, the sector ETF we're getting traction massively. Or you can build also some alternative strategies with this kind of sector too. You can play long, short. You can play long the sector on short the indices. You can play plenty of things with this kind of bricks. It's very useful.
I read the results of a survey conducted by State Street Global Advisors in the first 4 months of the year, and the healthcare and technology sector ETFs have resulted as the most popular among wealth managers. But going forward, Romy, do you think this is still going to be the case?
I definitely believe there's several things there. One is obviously the late cycle investing. I think there, in terms of moving into more defensive types of, but there's also what's going on in the world. I mean, if you think of, the technology, cloud computing, big data, Internet of Things, the trade wars, right? These should be relatively untouched, generally speaking, very high, generally speaking. The aging population, growing demand in emerging markets, et cetera. So I think from a global macro and from that perspective, there's more. And it's really, and then when you look at it from a active management versus an ETF, and quite frankly, we're not really seeing a lot of we're seeing it doesn't make any sense to pay that 1% or 1.5% to an active manager, generally speaking. And so from that perspective, I think it would definitely continue to grow. But there's risks, and it's really around the index construction, right? Because if you think of the market maker of that index, how is he or she going to hedge themselves going forward? If they do China healthcare, what's the hedge behind that? So from an index construction perspective and liquidity perspective, the investor is going to pay for that going forward. So it's very depending on how these sectors evolve and what new ETFs are created there. We really, as investors, we need to keep an eye on the index construction per se, not so much because of liquidity risk. Because we could find ourselves in another 2008 hedge fund style crisis.
I like sector ETFs because first of all they're very clear to explain to a client. You just say it's healthcare in the US.
You can tell a story.
Yes, you don't have to. Just name it, and they have a picture in mind. You don't have to explain like a factor. The other thing is I like them because all the stocks in a sector usually, and now we had an exemption, but usually they stay in this sector. So I don't have to implicitly pay for the movements between in and out of an index when you talk about the sector. So it's really a clear building block once again. And that's why we have it in our portfolios. We don't suggest it to the clients. It's not on the sample portfolios, but we allow clients to, as an option, to customize the portfolio and then use the sectors. And many of the more savvy investors, they do this. So in Europe and in the US, you have all these sectors. It would be nice to have the sectors in more markets. So I think there's still room for growth.
Again, I think that there are a lot of pros for this kind of ETF, but now we see more and more maybe competition between pure sector ETF and thematic ETF, where the frontier is less clear. But I think that it will be maybe will slow the growth of the sector ETF because of all these very popular thematic ETF. Maybe we have to see the ability of this thematic to deliver in the future, and maybe after that, people refocus again on the sector ETF. Some thematics are very, I think, powerful and will be able to generate significant alpha in the year to come, but not all of them. So I think that in 10 years, maybe the spectrum of the thematic strategy will narrow just on them that are very powerful. Again, it's a very evolving process.